Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Okay, welcome everyone. My name is Andrew Ruffo. I'm a stock strategist here at Zacks Investment Research. I'm also the manager of the Tech Innovators portfolio. And today I'll be covering our top stock for July 3rd, 2023. MicroStrategy is a Zacks rank number 3, which gives it a hold. It was a Zacks rank 1 a few days ago. It just switched over, but overall it still has some pretty strong ratings, including an A for growth as well as a B for momentum. Its computer software industry ranks in the top 37% out of all industries tracked by Zacks. So MicroStrategy Incorporated is a software company that specializes in business intelligence and analytics software to analyze internal and external data in order to make business decisions and to develop mobile apps. So the company's tools allow for data discovery and exploration, interactive dashboards, data visualization, and reporting capabilities. So a lot of people probably recognize this gentleman. His name is Michael Saylor. He's kind of the face of the company. And Saylor was one of 3 founders and was the former CEO of MicroStrategy. And before its initial public offering in 1998, MicroStrategy signed its most important client, the fast food giant McDonald's. And McDonald's has been a client ever since. In fact, when McDonald's started installing its next generation kiosks at its restaurants, there was no way for managers to kind of receive the insights into the transactions that they needed. So once again, McDonald's called upon MicroStrategy to deploy their software. And now McDonald's has that information across their enterprise. It's democratized across their entire enterprise. And obviously, any decision for McDonald's is going to have huge impacts as far as monetary goes. So it gives everyone in the organization the information they need to make well-informed, data-based decisions. And MicroStrategy also has other prominent clients, including Pfizer and ABC Television as well. Now let's take a look at the company's earnings estimates, which are quite robust for the next 3 quarters. Analysts are expecting triple-digit year-over-year growth. And after 2 tough post-pandemic years and a nasty tech bear market, analysts are expecting MicroStrategy to get back on track. As I mentioned, over the next 3 quarters, they're seeing that triple-digit earnings growth. They're also going to swing back to profitability, which is always good to see. Now, the main reason people own this stock is not necessarily for that underlying business. It's where they're moving. And as I mentioned before, Michael Saylor, he's sort of the face of the company, even though he's no longer the CEO. A couple of years ago, he saw frustration with monetary policy and the central banks. He noticed that the monetary system has been expanding by approximately 7% per year, while inflation tends to rise at a clip of 2% annually. So those numbers are not huge, but over time they add up, and Saylor noticed this. And he's a businessman, he's a billionaire, he went to MIT, he's quite eccentric, but he decided to move the company onto what he calls the Bitcoin standard to fight this. So basically what he started to do is he started to purchase Bitcoin with the earnings that they were getting from the software company, and he just became fascinated by it. He wanted an alternative to this monetary system. So during a recent interview, Saylor said, what we were doing was that we're inverting the balance sheet such that we're floating on a Bitcoin sale, a crypto sale, if you will. And as the liquidity and the monetary system gets pumped up, we want to float rather than sink on that pool of liquidity. So he's looking at this not only as a way to get away from that monetary system, but a way to actually profit from it and succeed from this expanding balance sheet that seems to have no end in sight. And if you look at a 5-year chart, despite all of the volatility, the Bitcoin standard seems to be working for the company. Over the past 5 years, MSTR has gained about 160%. And if you compare that to the S&P of 67% gains, it's quite a lot of outperformance. Obviously, it's going to be a bit more volatile. And a lot has changed since that first time when Saylor had that Bitcoin epiphany. The company now owns 140,000 Bitcoin worth roughly $4 billion. So he's one of the largest holders, obviously a whale. And in other words, MSTR has morphed into a Bitcoin proxy, which has not necessarily been a bad thing over the past few years. So despite Bitcoin being off those highs of 69,000, the FTX debacle, the crypto winter, once again, it's outperformed. So we'll see if that continues to do so. It is breaking out today. And since it is a proxy for Bitcoin, we're going to cover some of the catalysts. So the first catalyst is the institutional entrance that we're seeing come into the space. In just the last few weeks, BlackRock, who's the biggest asset manager in the world with roughly 12 trillion in assets under management, they filed for their first Bitcoin ETF, as did Fidelity, who's also another huge management company. So if approved, these ETFs, what they're going to do is it's just going to allow a lot more access to a wider range of investors, and it will act as a long-term catalyst for Bitcoin, in my opinion. Catalyst number 2 is real-world use of the crypto, and critics often say that Bitcoin cannot be a substitute for traditional currencies. However, the market is telling us a much different story. If you look at Bitcoin in the US, it's well off of its highs. However, if you look at these hyperinflation countries such as Argentina, Turkey, Bitcoin is actually hitting new highs versus these currencies. So though it remains well off its highs domestically, it's hitting new highs in those countries, and that's a sign that global real-world adoption is coming, at least in these countries hit by this hyperinflation and government spending and corruption. So catalyst number 3 is the Bitcoin halving, which is a highly watched event that occurs approximately every 4 years. It's a pre-programmed piece of code written into the Bitcoin protocol that reduces the rate at which new Bitcoins are created and introduced into circulation. So it's got a built-in monetary policy. The total amount of Bitcoin that could ever be put out into circulation is limited, whereas for example, the U.S. Federal Reserve, they can print as much as they want. They're going to inflate the dollar, but they can do that. The euro, same thing goes for that. So that's definitely one of the benefits that people are seeing in these countries plagued by that hyperinflation. And if you look on the chart that I have here, the reason I'm saying it's a catalyst is the last 4 times that the halving has occurred, Bitcoin has gone on a massive run. So even though it's a known event, it's led to some pretty dramatic rallies after the halving has occurred. And another catalyst is going to be the regulatory clarity that I think the space is going to see soon. A few weeks ago, the SEC filed a lawsuit against the largest crypto exchange in the United States, Coinbase. So obviously, it was a short-term hurdle for the company, but the outcome may be bullish for Bitcoin over the long term because it will provide the industry with some much needed regulatory guardrails. So presently, Coinbase and some of these other crypto exchanges are kind of doing their best to follow rules that don't actually exist yet. So it might be a hamper on Coinbase, but I think for the overall space, that clarity will definitely be a catalyst long term. At least they'll know what rules they need to follow in order to not get sued by the SEC. And anyone who follows my work knows that I like to pay attention to how my positions are holding up, specifically to negative headlines. So on Friday, a negative headline from the SEC about inadequate Bitcoin ETF filings hit these crypto-related stocks. I think MSTR was up about 4%. Within minutes, it was down 4%. But at the end of the day, it shook off the news and it broke out of a long base structure. I think it's getting a little bit of follow through today, but it's rebounded quickly from those negative headlines. So that's really a sign of resilience. And as I said, it's about to break out of a 1 year long base structure. So the price and volume action are there, and we have all these catalysts at our back. And now I'm going to hand it over to my colleague, Nina, who will cover her top stock. Thank you very much and enjoy your week.
Thanks, Andrew. I'm Nina Mishra, and my top pick today is Palo Alto Networks, ticker symbol PANW. So Palo Alto, as we know, is a network security solutions provider, and the stock has benefited a lot from sustained demand for cybersecurity products and services, and that demand is likely to continue despite even if the economy slows down. So that is good for the company. And there's a lot of buzz around AI this year, but AI and cybersecurity are in fact complementary technologies, and they boost each other. They need each other, boost each other, because we know that AI is being used by companies, by individuals to boost productivity, but AI is also being used by bad actors and cyber criminals to launch attacks and create deep fakes, etc. So as we increasingly adopt AI, the need for cybersecurity will continue to increase. In fact, the CEO, Nikesh Arora, recently said that the company has been using AI for many, many years. So the company reported excellent results recently, beating on the top and bottom lines, and also raised its guidance. In fact, earnings were significantly ahead of the guidance range as well. And let's take a look at some charts on Zacks.com. So this is a Zacks ranked #1 stock. If you go to the code page and look at detailed earnings estimates, you will see this excellent record of beating positive surprises. And after the most recent positive surprise of almost 20%, you will see that analysts have been raising their estimates, earnings estimates for this company. 16 analysts have raised their estimates, and earnings as well as revenue estimates have gone up significantly since their last earnings report. Now, as I mentioned, it's a relatively new company, but if you look at the EPS surprise record, looks very good. In the past 5 years, the company has not missed even once, all green arrows over there. Now, the stock is not cheap. In fact, it has gone up more than 80% year to date. It is one of the best performing stocks of the Nasdaq 100 index, just behind Nvidia, Meta, and Tesla. So that is why it is trading at an expensive multiple. The stock looks expensive, trading at a forward PE of almost 60 times, and that is why it earns a style score of F for value, but A for growth and A for momentum. And why A for growth? You will see that expected EPS growth 3 to 5 years is 31.5%. For the current year, you will see the expected earnings growth current fiscal year is almost 70%. That is why growth as well as an expensive stocks in terms of valuation. So another thing which has benefited Palo Alto is its inclusion in the S&P 500 index recently. So this is a relatively new company. It IPO'd about 10 years back, and after about a decade of losses, the company reported 3 consecutive quarters of profitability and met the criteria for inclusion in the S&P 500 index, and the stock benefited. So the stock is not cheap, as I pointed out. It is suitable for investors who are looking for high growth but have a higher tolerance for volatility as well. But being a Zacks rank #1 stock and excellent growth potential, it is worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week.